From today, you'll no longer confuse the time frame with the structure. We'll start with their definitions, followed by practical examples on the chart. Basically, the time frame defines how much time each candle represents. Minutes, hours, days, weeks, months. The time frame gives you the answer to the following question. Exactly what zoom level am I looking at right now? So the specific time frame doesn't tell you the direction, it only provides a certain perspective. But market structure describes how price moves by forming highs and lows. So there are two distinct and different types of structure to consider. Bullish structure, higher high plus higher lows, and a bearish market structure, defined by lower highs followed by lower lows. So the structure itself will give you the answer to the next question. So what exactly is the price doing right now? Therefore, the logical conclusion we can draw is that structure tells us whether the trend is continuing or changing. The crucial point to understand here is that the time frame equals the visualization of the underlying structure, and structure itself is actually just price behavior. Basically, here we can see the two distinct types of different structures. Let's examine both bullish structure and bearish structure. Here we can clearly see a sequence of a higher high, a higher low, another higher high, a higher low, and one more higher high, which will later transition to become a lower high, a lower low, followed by a lower high, and a final lower low. Right now, at this particular moment in time, we're on a one-day time frame, and it is possible for us to very clearly observe the one-day structure, which is precisely the one we're looking at here. However, if we decide to shift our perspective and use a much larger time frame, such as the weekly chart for instance, we can clearly observe that the underlying market structure remains essentially the same, though it is presented with far fewer intricate details. This lack of granularity doesn't really help us to understand the specific nuances of the one-day structure quite as well as we might need. But if we instead choose to zoom in slightly and use a 6-hour time frame to analyze the price action, we can see how the structure is fundamentally identical, but we have a vast amount of additional detail and can comprehend the overall picture much better. The same situation applies if we choose to use a 1-hour time frame. Basically, we have the same structure, the daily structure, but with much more information on the chart. So, no matter what kind of time frame we use, the underlying structure remains exactly the same. The main difference is that we'll be able to identify and examine certain specific details of a structure much more clearly. Now, let's move over to the 4-hour chart and follow the 4-hour structure. A structure that looks exactly like this. Basically, here we have the 4-hour structure, and we find ourselves in exactly the same situation here, quite irrespective of the specific time frame we might eventually decide to employ. The underlying structure remains entirely identical. If we use the 6-hour, we see the same structure. If we use the daily time frame, basically the structure is the same. If we use the chart for the 1-hour time frame, we basically have the same structure. The difference lies in the details we can observe depending on the time frame used. Now, let's go back to the 4-hour chart time frame. Let's have a quick look at this area. As we're all well aware, the financial market is inherently fractal in nature. So basically, within each structure, we'll be able to find a smaller structure, a secondary structure. If we observe closely, we can clearly perceive how this movement presents within itself another structure, a smaller structure. This is a particular structure that on the 4-hour time frame is only just about visible. If it were clearly visible, it would be something that looks precisely like what we see here. But because the specific period of time used is a particularly extensive one, we might not correctly identify the underlying structural details. Because of this, we'll choose a much smaller time frame now to see more correctly if the particular structure we've selected is absolutely the right one for our needs at this moment. In this situation, I've chosen the 1-hour time frame, and we can carefully sketch out our lower structure in the proper and correct manner this time, which looks precisely in the following way. So if we look at it fundamentally, within this 4-hour structure, we can clearly identify and observe a lower structure correctly identified on the specific 1-hour time frame chart. But if instead of the full 1-hour time frame chart, we had used a shorter 30-minute time frame instead, we could basically have seen precisely the same market movement occurring. Essentially, this is the specific way that the price action behaves when you look at the lower structure. If we use a 15-minute time frame, we can see more details, but the structure remains the same. So, the structure basically shows us the price behavior. In conclusion, the time frame only helps us to visualize, while the structure basically shows us the real behavior of the price.